Hello, everybody. Big show today. I'm on the wrong slide. Wow. Here we go. Ta-da! Don't want to burst the excitement. There's a lot of stuff going on today. And all the questions from the week represent your interest. We're going to talk about Bitcoin supply distribution, hardness, what happens next, a new price prediction model. We're also going to talk about pair trading, how to reallocate assets when ones get a little bit toppy. And we're also going to talk about DCAing, what happens now. Some people are stuck on the sidelines and they don't know what to do. We'll also talk about retirement funds, mutual funds, 401ks, what to invest in, how to determine your future. And yeah, crazy times. A lot of stuff to dig into. Thank you all for coming. Thank you as well to the mods in the chat, TND Tesla, K8. Thank you to Mr. Hammer. Viciously, I see you back, and a whole bunch of others. Let's jump in. Let's jump in. And this is not financial advice, just edutainment, just a guy on the internet. And all the questions come from Patreon. Huge shout out to thank you to everybody on Patreon for making this possible and allowing us to work 7 days a week, which is awesome. Now, first question. This is an interesting one. Living like a panda. If the current demand for Bitcoin is 10x the daily production, increasing to 20x at the halving, and the previous all-time high was 68K, is it possible that the price of Bitcoin could reach somewhere between 10x or 20x 68K? My simple math would put the price between 680 and 1.35 million. Wouldn't that be nice? Yeah. So first of all, your logic, I don't want to burst your bubble, but it does oversimplify the complex dynamics of price determination in markets. Now, price is influenced not only by supply and demand, but also by other factors: market sentiment, the economy, regulations, investor behavior, investor sentiment, macro, tech, you name it. And while increasing demand against a backdrop of limited supply due to halving will put upward pricing pressure, but the question is how much, and I think yours is a little bit of a stretch there at 10x. So what I've done is broken it down a little bit easier. And this is my sandbagged logic. And I'm going to walk you through it. Then I'm going to walk you through a subsequent piece of logic. And you guys can make your own decisions. But either way, it's going to be a good time. Now, I did refine our analysis. I shared this, I think, in one of my ETF videos earlier in the week. But basically, we're doing $500 million a day, which is insane. And if you take 252 trading days, you get a lot of money. But the question is, will that money flow continue? All right, that is absolutely critical. And also, I've got the new IA halving multiplier, which I calculated based on what has happened just over the last 26 days of the ETF. And it's crazy. And remember, there's a couple of things that we have to bear in mind. One, we are early. Two, Grayscale is dumping a huge amount. They dumped nearly 30% of their 621,000 Bitcoin in 26 days. It's insane. Imagine when that turd is flushed from the system. That's going to be a good time. But we have to assume that the money flow continues, and we don't know if that's going to happen. But we do know people are looking at alpha, and we do know we're early, and we do know we've got 59 and 58 days to go to the halving, and we do know it hasn't even hit kind of the markets yet as to exactly what's going on. So even if we assume we're not going to get $500 million a day, but just a quarter of that per this multiplier, which doesn't even take into account the halving, will take us up to $173,000 if the ETFs take in 125 million a day. All right, that's a pretty easy stretch based on my conservative numbers. But let's break it down a different way. And again, I encourage you all to take these numbers and create your own models, because that's a big part of how we go forward. Now, this is the actual breakdown of the new IA ETF only price logic. I know it's a very long-winded name, but hey, I'm trying to explain what it is. So the total money flow in, and this is net of the dumping from Grayscale, is $5.065 billion over 26 days. The initial Bitcoin price at the start of the ETF flow was $42,903. We've gone up, call it $10,000 to $52,162. Now it's $51,800. It's fallen a little bit since I put this together. But anyway, that's Bitcoin. Goes up and down $300 in a matter of minutes. And the average daily money flow, this is important, has been 194.8 million a day. And the price change went up $9,200 over 26 days. That's $356 a day. So in simple terms, the price impact of $100 million increases the price by about $182. And the average daily flow annualized is 50 billion. By the way, it's unbelievable because my Ultra Bull ETF flow for the first year, Ultra Bull, was 50 billion. We're easily on pace to doing that right now. Easily. Because remember, when Grayscale goes away, these numbers will be a lot higher. Now, let's get back to these numbers. Here, that's 50 billion. Over 100 million is 500. 500 times $182 for every 100 million is 91,415, which could take us theoretically to a price target of adding 52K, the current price, plus 91,000 goes to $143,577 1 year from now. And I know that sounds crazy, hard to imagine, but everything's possible in crypto and everything is possible in this disrupted exponential world. But remember, flow will never be continuous. There will be fits and starts. There'll be big days and small days. But remember, this is the crazy piece here that this doesn't even take into account. Scarcity. This thing will get harder and harder and harder. I'm going to talk about Bitcoin distribution in a few minutes. The halving is coming up. GBTC is going away. Retail buyers aren't in yet at the scale we need them. There'll be other inflows, not just these 9 new ETFs. And the miner flows are not factored in either. The miners have been dumping. What happens? What happens when the miners start to hodl? And they say, you know what? I'm going to hold this $50,000 Bitcoin for a few months because I know it's going to 100 grand. Then we're going to have a crazy supply crunch. I mean, it's really crazy. But this, again, just takes into account all of what's happened over 26 days. It's extremely positive. Even if you take a quarter of the flow, and that doesn't take into account the halving, Grayscale going away and everything else, it's still going to be crazy. So super exciting time. And regarding the whole retail stuff, I did tweet this earlier, but it was nested under a tweet. But Preston Pish, etc. were on the actual thread. And I really would argue that the awareness and the impact of the halving has not sunk in yet. This is a chart I shared. It's Google Trends globally for Bitcoin halving. Nobody's looking it up yet. But if we look at 2015, nobody knew about it then either. 2020, people did, and there's a big spike. I expect the awareness and knowledge of Bitcoin halving to explode over the next 60 days. And then everybody will be sucked into the platform. And then we'll see massive price appreciation. So early days yet. We'll see. It's just, as I say, exciting time to be alive. Next question. From Other Dave, do you anticipate hypothecation or rehypothecation risks in future for the Bitcoin ETFs? Are we in danger of having an explosion of paper Bitcoin, just like we have paper gold today? Great question. And this is always a concern, and you never want your stuff rehypothecated, but there is a huge difference between gold and Bitcoin. Let me explain and break down some of the ideas. First of all, yes, there are always risks, and you should always be aware of the risks of certain financial practices that are normal in other types of finance. But Bitcoin is different because not only is it super scarce, the 21 million, again, we'll talk about distribution in a second, can never exist. But unlike gold, which can be mined without a limit, you just dig a little bit deeper if you want more, the difference really makes it harder to create a lot of paper Bitcoin because of the wallets are easy to audit. And a shout out to, I think it's Bitwise, have their wallet address up. I think Fidelity are going to put theirs up shortly as well. You'll be able to track exactly what's in their bag at any time. Okay. In addition, there's lots of rules and regulations around how they need to manage their Bitcoin, how it needs to be verifiable and audited, etc. And these rules and monitoring will become stricter and stricter as well as these asset ETF grows larger and larger. And as more big investors start participating in the Bitcoin network, the market grows up. The investors will demand clearer rules and better ways to manage risks. So if anything, I don't think there is a large risk of that happening. And the other problem is when you compare gold, nobody knows anything about gold. People have gold bars, but they could be just a piece of lead wrapped in a gold wrapping paper. We don't know what's in Fort Knox. We don't know what's in the gold ETF. We don't know how verifiable it is. It's a complete joke. And we had a Patreon member write in, they said they got a couple of little bars of gold. They're in Europe. And they said even if they wanted to, they couldn't convert it to cash because there's no market. And if there was a market, the fees would kill you. So not only is it not portable, but you can't even trade it. It's not liquid at all. So gold is dead. And we see that already with the ETF flows out of the gold ETF, even out of many of the gold miners. But Bitcoin is transparent and it's immutable and it's very special. That's why it's a different asset class. So from that perspective, do not be concerned about it. And again, I believe all of the ETFs will start listing their public address that you guys can all check and you can monitor and you can watch the daily flows in and out and everything else. And that is the beauty of this thing. So let's go to the third question from Justice Will. In the scenario where Bitcoin doesn't undergo a bear market in 2026, do you anticipate a similar trend for altcoins, or do you foresee a decoupling between Bitcoin and altcoins? Great question. I think about this all the time. And a quick reminder, what happened to gold? We're talking a lot about gold today, which is unusual. But it's not because we are fans of it, but because it's a good analog. But the gold ETF was up only after the gold ETF launched for 8 years. There was a dip there with a big red arrow in the middle. That was the global financial crisis. And it shows you even gold sells off in that. But the rest was just up and to the right. This is completely crazy for 8 years. And as I just mentioned, as I said before, Bitcoin is a lot harder than gold. Okay? So this is exciting. In addition, whoops. I thought I had some more notes on this somewhere. But the thing about altcoins, I did have. I wrote a whole piece. Aha, here it is. Why is it out of order? I wonder what else is out of order. But this is kind of what I did believe regarding the decoupling of altcoins. And a quick breakdown is I do potentially, is it maybe 10, 15, 20% chance that the Bitcoin ETFs will just drive Bitcoin up for a long time. The more valuable it becomes, the more serious it becomes, and the more people will allocate into it. Now, regarding the decoupling, I do believe that crypto will decouple. And as you know, I'm a great believer in scam coins and dead chains, and they will wither away. And we know who they are already. And that's why I make myself very unpopular with those that own these things, and their strategy is hope. But we know here in this channel, hope is not a strategy. Very few will survive. 1 or 2% of all the thousands, tens of thousands that are out there. Very few will survive. Now, back to your question. If gold continues to rise, there will be that decoupling. But crypto itself is going to decouple into different areas. If you have cryptos that have very good product market fits, and they do things like payments, tokenization, DeFi, AI, gaming, they will be the cryptos running the new system. And they are not going to suffer bear markets like they did in the past, because they will have real value, real use cases, okay, all across the board, even oracles and stuff like that. So from that perspective, we don't know what we're going to get till we get there, or till we get close and we look at on-chain. And if there's a blow off top, there'll always be a recovery. But remember, something can 10x and then take a 20% haircut. That's normal. That's how markets work. That's why traders exist. And we'll talk more about that later as well. So we'll know. We'll be on top of it anyway this time around, which is going to be great and exciting. So hope that helps the question. And it's a very, very good question. Let me see. Somehow I think the slides are out of order. Huh. Anyway, we'll just go ahead. I think they should be. This is from P. Rico, maybe in Puerto Rico. I finally signed up for Patreon after more than 2 years of watching the vids on YouTube. Now that Tesla has taken a hit and crypto has gone up, would you recommend rotating some of the crypto profits into Tesla, or is it too early? This is a question literally I probably get 1,000 times a day. It's unreal. And I'm going to show you exactly how my portfolio has evolved just over the last few months, which has been insane too. But first of all, I try to use AI to create a graphic to represent this. And one of the mistakes that people make in investing is they chase pumps. If you are chasing pumps, you'll never catch. You'll always be too late, and you rotate around, you end up just losing money. So this graphic is trying to portray that not all things will rise at the same time. Some will sleep for a while, but then they'll eventually pop. Some will pop, and then they'll mean revert down again. So always think of that as well. When it comes to kind of the key lesson, which I did actually post earlier in the week, don't chase pumps. Remember, it's impossible to invest and have all your assets to go up simultaneously. Each ticker, each asset has its day. And I encourage everybody to exercise patience. But if you frequently shift investments to chase gains, it will often lead to losses. It's extremely difficult to do. Okay, really, really, really difficult to do. But if you create allocations and you allocate according to risk and return, you will be just fine as long as you have patience and the time frame. So I'll give you an example of my actual portfolio today. I am right now 73% crypto and proxies. 73% crypto and proxies, and then 27% things like Tesla, Nvidia, a little tiny bit of Baba, a little bit of Enphase, etc. But those things that I speculate on are tiny. Some of them are like less than 1/3 of 1%. But you can see I'm heavy in big chunks. But some of those big chunks have exploded lately because I'm in very leveraged positions. Things like proxies like MicroStrategy and CleanSpark have completely, and Solana have completely skewed my portfolio. And that's kind of good in a way, because that means my Tesla is now 25.1% of my portfolio. Not too long ago, it was 50%. But the performance of crypto and crypto proxies especially have just skewed everything directly. So if you allocate, if I wanted to try and chase, I'd say, for example, sell all my Tesla and reallocate to crypto, and then crypto has a poop, then I'm toast. But this allocation is completely fine right now. I could right now at this stage sell, say, all of my Solana and move into Tesla. But no, because I think Solana has more to run. And I do think Solana and Bitcoin will outperform Tesla over the coming months. But there'll come a time when the penny drops and something radical happens, just like it happened with Nvidia. And we have to wait for that time. And I'll be showing a video, Nvidia Tesla chart in a minute too. So just, allocate according to risk, return, and just wait and be patient. But don't try and make everything run at the same time. That is a failure of a strategy. And I've seen people try to do that as well. So next question kind of ties into that too. This is from David 4. My Nvidia bag made my equities portfolio go to 35% Nvidia and 65% Tesla. Is it time to swap Nvidia for Tesla? This is another common great question. And I sold about 80% of my Nvidia because it went up so much, and I did want to allocate a little bit to crypto and other stuff. But I still hold 20%, and I haven't sold it despite how high it's gone. But there was a great interview on one of the few ones on CNBC with a guy called Jeff Kilberg, and he's a smart fox. And he actually talked about this. And you know me, I'm heavier Tesla than Nvidia. But if I had kept all of my Nvidia, maybe they'd nearly be in the same situation as you are right now. But Nvidia has experienced a huge parabolic move. It's increased, I think, 50% just since January. And despite this, there are expectations for a short-term pullback, especially if you look at mean reversion, RSI levels, you'll see that very clearly. But the opportunity in Tesla like you guys know I'm a Tesla bull, but per Jeff Kilberg, he reviewed it as a significant opportunity, especially those who have already profited from Nvidia's surge. And he suggests taking profit on Nvidia and reallocating to Tesla. And he also talked about how Tesla's investing very heavily in AI. It's an AI play, and it's only a matter of time before they hit that tipping point as well. So we'll see. It was good to see other people thinking along the lines of like how we do. But let's look at the chart for more answers. This is the Tesla Nvidia pair chart. So Tesla divided by Nvidia, and you can see that Nvidia has smoked Tesla. That is signified by the price of this chart going down. And you can see the two huge parabolic runs that Nvidia has had versus Tesla over the last 2 years. Absolutely crazy. But right now, is the ATR model. And the ATR model is actually on the 2-day chart. There is no noise suppression, and it's on the trend logic setup. If anybody wants to replicate this on their ATR, go right ahead. You can see this 86.6% right at the time when it fires a buy and sell signal. I found the 2-day worked better than the 1-day for this. The weekly works even better, but that's too long a time frame for me to trade. But you can see here we've got 3 little buy triangles about to flash green on this, which means it's about to flip. So Mr. Kilberg is going to be bang on, and I expect this chart here to mean revert, and there'll come a day where literally it'll go right back up. We just don't know when that day is, and there's a lot of headwinds with the way that Elon Musk is very unpopular. I cover that on Cyberbulls as well the last 2 weeks on Herbert Ong's channel, so just be careful. But this does paint a very good picture as well as we go forward. Let me figure out exactly what's going on, because I do have a... no, it's not. Everything's good with the slides. So I hope that clarifies that. Again, going back to this little image, it's very hard to be in assets that are all pumping at the same time. But don't ever chase that dream, because you will lose. It's very difficult to do. And you're looking at somebody who looks at the markets 24 hours a day, 7 days a week, and he finds it difficult to do. So let's talk about this. Next question, Bitcoin distribution. This is from 100 Tisicuro. I love that name. I saw this picture of Bitcoin distribution. Can you check if it is really like this or close to it? So here it's Bitcoin ownership distribution. It's from a company called River. The data source is Bitcoin treasuries. And what I did was I created a different version of it, like this, to give you the exact numbers and the percentages. Across miners, 3.4%, individuals, 57%, businesses, 3.6%, funds and ETFs, 3.9%, soon to be 5%, governments, 2.7%, Satoshi lost, 5.2%, lost estimate, 3.7 million Bitcoin, 17.6%, and yet to be mined, 6.6%. So this was a good graphic, but it is not the same as my view of the world. And I spent, since 2017, I've been aggregating the list of lost coins and was able to project out how many are actually being lost every single day, how many have been lost so far. So mine is different here. And after this slide, I'll walk you through the delta of how they compare. But this is super interesting, especially for new people coming to the space who think there are 21 million Bitcoin. No, there are not. So I estimate at least 5 million are lost, and more are being lost every day. And I have some projections that within 20 years, it may only be 11 million Bitcoin. But with the ETFs here, that'll protect some of it from getting lost. Yet to be mined is also different. It's 1.368 million. The miners, I calculated they have got 760,000. I've got a model for that. Individuals, only 10.6 million. That's 50.82%. Businesses, 868,000. We're pretty close on that. Funds and ETFs, 725,000. Governments, 565. And Satoshi loss is 1.04 million, not 1.1 million. So you can see here, I'm a little bit different, and the deltas of these look like this, and you can see where the big differences are. It's basically around lost coins. I have it at 5, they have it at 3.7. My miner numbers are different, and my business numbers are 110,000 different. My funds and ETFs are 92,000 different. And the Satoshi bag is 60,000 Bitcoin different, and yet to be mined is 11,300 different. So it's very close, but it's not perfect. And I would betcha my numbers are closer than the River numbers, because I've spent a lot of time looking at them, which is interesting. So yeah, it's good to know exactly what's happening. And if for me to forecast what's going to happen next, I do expect the ETFs to grow a lot. That'll be way north of 5%, 6% real soon. So that'll be, over 1 million Bitcoin will be in ETFs real shortly, and maybe as high as 2 million by the end of 2025. And a lot of that will go from individuals directly to ETFs. The miners, of course, they will hold as much as they can, and they'll sell as much as they can, getting close to the tops. So that's why it's a key indicator for us as well to watch what the miners are doing with their bags. And then lost will increase over time. People are still losing the keys. People are still losing the wallets. People are still forgetting about Bitcoin that they had somewhere, or aren't able to retrieve it or find it. Or they're sending Bitcoin to a black hole. This stuff happens every single day. And it's tragic, but again, it makes the asset even more scarce, which will drive the price up too. So hope that helps. Now I've got this one slide here, and I think it is out of sequence. Let me see. This is one that I took from a tweet earlier. I don't know what happened to the slides. Somehow some section got moved, but didn't carry all of them with it. But I thought it was interesting to talk about BlackRock. A lot of people are concerned about BlackRock being in the space. And this is from British Hodl, who is a friend of the channel, and he requoted Thomas Farrer. And I thought it was very interesting. It's like, BlackRock does not care about sound money or ending the Fed. When BlackRock ETF buys up 500,000 Bitcoin and the price goes to 1 million, BlackRock makes 1.25 billion in annual fees forever. And that's important as well. This is gold 2.0. Okay, 1.25 billion in fees would account for about 7% of their gross. That is BlackRock's gross revenue. And again, it is indeed intriguing. BlackRock can do really, really well from just ETFs alone. They don't need to manipulate it they can still make a lot of money by just playing the game. So hope that helps. Next question is from Veg Trader, submitted on behalf of the grateful latecomer. I am 82 and investing on my own in a $100,000 account, monthly income from IRA, but want to build my non-IRA at Fidelity. And about half of Fidelity is in Tesla and some in an IRA, some in 3X miners, Nvidia and MicroStrategy. Bought Bitcoin directly through Fidelity with their 1% spreads. I dislike self-custody. Good point. I opened an account for shares of FBTC, which is the Fidelity Bitcoin ETF. And which of these two Fidelity Bitcoin accounts is better for future purchases? Should I combine them? This is interesting. So first of all, very proud of you for doing this. And you have quite the aggressive portfolio for 82. But let's look at the two Fidelity questions first. First of all, you got your Fidelity crypto. They do have higher fees. It's 1% per trade spread, but it gives you greater control. But it's higher risk, especially if you can manage it directly and you can transfer it to your own wallet if you desire. So from that perspective, I do believe Fidelity crypto may not be a fit for you. But the Fidelity Wise Origin Bitcoin Fund, FBTC, it has low investing fees, only 3.35% now expense ratio. It does track Bitcoin's price. It's very easy to manage. You do have less control, but you also have no risk to losing your own Bitcoin. So from that perspective, I think option 2 could be good for you. But I do want to highlight one thing as well. Always be prepared. Always allocate. Always fear the worst. So for you, I like the way you're thinking. Go the low risk option. And remember, don't have all your eggs in one basket. There's always that 1% chance that Bitcoin could go to zero. It's highly unlikely. It's probably like a fraction of 1% right now. And also remember, miners are cutthroat. Allocate wisely. I'll talk more about the Bitcoin miners right now and how important it is to pick the right ones and stay healthy and be ready to rotate and rebalance as these assets run as we go forward, as you covered before. When things get toppy, move them over to another asset. Now I'm just going to go check on one thing. I think we're good for now. Everything should be in perfect sequence. This is from Dummy Boy. My crypto portfolio is currently 55% Bitcoin and 40% Sol, and the remainder in SOLALTS, which would be 5%. That's how I began about a month ago, but it's completely changed right now. At the rate of Bitcoin is climbing, is now the time to convert my Sol bag to finally become a Wholecoiner? I fear the opportunity to become a Wholecoiner may slip since it may outpace Sol with the launch of the ETFs. What would you do? Super interesting question, and it's a tough one. So first of all, my whole Wholecoiner thing was to motivate people to get to that threshold because there'll be so few of them in the future. Right now, I believe there'll be less than 355,000 Wholecoiners ever on the planet. But now the millionaires and billionaires are coming in and they're grabbing a little Bitcoin and they're making it even harder for it to happen. However, I do believe Bitcoin will continue to climb with these ETFs. So that's a good thing, but Solana is also a very promising cryptocurrency with a lot of potential. And if you look at the pair chart, Sol over BTC, Solana has smashed Bitcoin over the last 15 months. Way, way, way better performance. So, and I do expect as well Solana to continue to outperform Bitcoin. By how much? We're not sure. I think if as I mentioned before, as Bitcoin goes up, the whole crypto market cap will rise and it'll float all boats, which includes things like Solana too. So I would hold. Don't have all your eggs in one basket, not everything in Bitcoin. You need to diversify. Even though I have very heavy concentrations, I am in uncorrelated assets as well. And some SOLALTS have 5 to 10x potential. But remember, diversify those too. So we're looking at layers of diversification here, from the mothership Bitcoin to Solana, and then the Solana alts even more diversified. So be careful, because you just need one of these SOLALTS to win. If you have 10, one to do a 10x, then the other 9 can go to 0. So you got to think like a venture capitalist in this regard. You're looking for that step change result, which will float all boats. If you get 2 winners out of 10, you're going to do real well. And so far, we've actually picked 2 that have done so good so far. Next question is from Mike 007. I've been swallowing all AIA stuff for a long time. Sorry. That sounds weird, like I'm shoving it down your throat. But that's okay. We read the questions as they're written. But still didn't get what's behind the derivative nature of miners versus MicroStrategy versus pure Bitcoin. What is underlying economics explaining much stronger Proxies volatility? So it's not only Proxies volatility, but also much higher returns. This is a key thing that, when I started investing hard in MicroStrategy, I had no idea that MicroStrategy would become far larger than my Bitcoin position. But that's just the nature of these things, because they just do so much better. Let's explain why. Now, the easy way to think about this, and I'm going to tackle MicroStrategy first, and then talk about the actual miners. But this is the whole Gambit and the self-fulfilling prophecy. MicroStrategy buys Bitcoin. Bitcoin goes up. MicroStrategy goes up because their Bitcoin value in the balance sheet goes up. Then they take out debt at 0% and they buy Bitcoin, and Bitcoin goes up. And then MicroStrategy goes up more. Then they sell shares and they buy more Bitcoin, and Bitcoin goes up and MicroStrategy goes up. And then they issue more stock and buy more Bitcoin. And their MicroStrategy goes up more because Bitcoin goes up more. Not only are they issuing shares, sometimes when it's a little bit overvalued perhaps, to buy Bitcoin, but then they're making Bitcoin more scarce and they're driving the price of Bitcoin up too, which drives the price of MicroStrategy up too. Now, the next step is for them to join the S&P 500, and then MicroStrategy will go up hard, and then everybody has to own it. Then they can issue more shares and buy more Bitcoin. Okay, some people refer to this as a glitch in the system, and guess who figured it out? Michael Saylor. So, and back to the S&P 500, I believe for them to be considered to be admitted into the S&P 500, Bitcoin needs to hit 76K, which is not far away, ladies and gentlemen. And remember, they do own 190,000 Bitcoin, and it just gets bigger and bigger and bigger, and it causes funds to have to chase and put MicroStrategy into the indexes. But when they join the S&P 500, that will be a crazy time. All right, so that's MicroStrategy, and that's why it outperforms Bitcoin. Let's talk about the miners. Oh, I do have to mention as well, it's a double-edged sword, MicroStrategy. So if the Bitcoin price tanks, this tanks more. Okay, so you got to remember, you go up in a much faster elevator, but when Bitcoin falls, the elevator you're in a MicroStrategy free crashes. Okay, so very important to remember that too. In addition, miners, why are they exciting? Well, they literally print money. Now, my theory on miners has been very, very simple. They make the Bitcoin. Okay, so they are they're like government money printers, except they're printing real money like Bitcoin, not fiat cash. And mining is a zero-sum game, and the winner takes most, like everything in crypto and in markets and everything else. And the most efficient miner outperforms. This is so critical. And this is why I'm obsessed with finding the leanest, meanest, most well-balanced machine. And that strategy has worked really, really well, where you see miners like CleanSpark smoking all the other miners, to the dismay of the people that hold some of those other miners too. Now, if you think of, the easy way to break this down, think of a mining efficiency difference. You've got two miners on the planet. One has a mining efficiency of 100 terahash a second, and the second one, company B, has 50 terahash a second. And even though both have the same market cap, say 100 million, as Bitcoin price increases, when Bitcoin price doubles from say $30,000 to $60,000, both companies see increase in revenues and profits. But company A benefits more due to its higher efficiency. Okay? It has more hash, therefore it mints more Bitcoin, therefore it gets more capital, therefore it can invest more and scale faster. This is the magic. This is the magic of miners is not about ruthless efficiency, but also about timing. Timing when you invest, when you issue shares, when you buy new rigs, and when you build hash. These are the things that are absolutely critical. Those that time this the best win. Now, the time to invest in hash and raise money was during the bear. Get your rigs and be ready to plug them in for the halving, and that's what the best miners are doing. And if you leverage, operation optimization, security innovations, and build scale at the right time, hodl at the right time, sell Bitcoin at the right time, you can beat the others. And that is key. That's why this chart here looks so varied. You can see the blue box is CleanSpark. 28,000 is their cost per coin shares. The Bitcoin mining cash cost per Bitcoin. I have my own model in this. It's a little bit different in some ways. Mine is higher. But anyway, I'll just share theirs. But you can see that as they build more hash and they maintain their efficiency, they'll be able to mine very profitably. Because remember, it's like a zero-sum game, a level playing field. If you are mining and your cost for each Bitcoin to mine is 78,000 and your competitor is doing it for 29 grand, who's going to make more profit and be able to scale more faster and win more and more? It's very like MicroStrategy. This is why we invest in miners. This is why the winning miners outperform Bitcoin. But remember, half of them will underperform Bitcoin. Half of them, or even the biggest ones, will outperform, who are the most lean and mean and most capital efficient. Sorry for that long-winded answer, but it was a great question. Next question is from Wenhu. My wife and I are in our mid-20s and aggressively saving our income to invest. If we stopped contributing to our 401k, that would give us around $700 more a month that we could save and invest. My reason is simple. My money now is way more valuable than 35 years from now, even if the company is matching that $700. What are your thoughts and saying, screw the traditional way for retirement and take it into our own hands? Well, you must have been listening to me because I had that light bulb moment in my head when I was about 29, 30. My father died. He worked all his life, retired, died of cancer. And he was like 66. And I said, you know what? I need my money now. I need to control my own destiny. And I was doing different things at the time, so it was fun. But let's look at an example of what happens and how the world is rigged, how the whole retirement system, the pension system is a little bit rigged. This is one of the top mutual funds from a company called Vanguard. All right. I'm going back 25 years. 25 years ago, this fund was trading at $47. Now it's $61.50. Okay. That's up 30% in 25 years. When money is debasing at 14% per year. So you're not going to make it. And a lot of these, I don't know how, it must be a sales organization, a marketing organization. They trap these employers into these fund managers and they make them buy this. I don't want to say anything bad about it, but the point is, you're dead right. I had to use a meme here. Top of my meme game. Ain't nobody got time for that. Literally. Crappy funds, no exposure to what you need, etc. You can already see why firms like Vanguard are threatened by Bitcoin. Because they sell these and they make a living off these, but they get you nowhere. All right? If you're stuck on that thing for 40 years, another 25 years, you're going to get nowhere. And Vanguard is guarding people. or should we say Vanguard is vanguarding customers from Bitcoin. And this is their offense to protect you all from Bitcoin. But they know it's a threat to their existing system. Now people are talking about a 60-40 portfolio where the portfolio is 60% Bitcoin. Not 1%, 60% Bitcoin. And the other 40% is equities. Bonds are gone. So that's kind of what's happening. So back to your point, what I would do, free money, first of all, you can't discount. But for me, kind of with my background and when I was in my 20s, I knew I didn't need money when I was 65. I didn't even know if I'd be alive at 65. So therefore, I didn't do the 401k stuff, etc. I just wanted the cash. I'd take the tax hit, etc. Not do the matching, and then invest. Invest in the markets, invest in brokerage accounts, make money, buy real estate. That was my whole model for 20, 25 years. Now, what you need to do, though, is do check your 401k offering. For example, do they have FBTC or IBIT in the 401k as an option to buy, or are they all these crappy mutual funds like this? If it's this type of stuff, no, don't do it. But if your employer is matching what you get, then do it. If you're investing 700, they're giving you 700, that's fine. But watch for vesting. This is very important here. If you don't plan on being at the company for another 2 years or 2 years or more, don't bother. If they have a 4-year vesting, it's just not worth it. And remember, the world is changing very fast. Forget 35, 40 years from now. Even 2 years from now, it'll be very different. So I would learn to invest, trade, research, and play the markets. And if you're disciplined, you will win. And a shout out to your wife, because the family that invests together stays together. I always say that. Those that don't do not do well. And this is another little quote that came to my little brain today. You're right. The value of money today, well positioned in disruption, will be worth far more than money trapped in a crappy mutual fund 40 years ago from now. Okay? You can take that to the bank. Thank you for the question. Next is from IG UK. I'm looking at trading foreign exchange. The time frame I'll be looking at is mainly on the daily or the weekly due to my work commitments. Which indicator tool will be best suited? And the most simple to use from the ones you have available, ATR or PTOS. If PTOS, then possibly keeping it simple, only for the optimized trend signal or FX. So the good thing is I used to do FX. FX is it's not as fast moving as you'd like. So I would definitely recommend the ATR for this and use it on the daily, sometimes the 12-hour if you want. But that will be best. And sometimes certain currency pairs work really well on deviation, not trend. So use the back test very carefully. Use the big, we've got a crowdsourced spreadsheet with hundreds and hundreds of pairs on it. Use that, check it up, and dial in exactly what you like. Find your rhythm and you'll be successful. PTOS is not designed for that. It's designed for inverse correlated pairs. Next question is from Stan, new to Patreon, regarding MicroStrategy. Let me see. I want to allocate 15K or 10% of my portfolio. For those of us who have not established a position but want to, is this a good time and how would you go about it? E.g. DCA, lump sum, 50%, then subsequent 25% buys. Volatility has kept me on the sidelines. Well, Stan, sorry about that. You missed a good party, but it's never too late. Never too late to invest. So there's a couple of rules regarding DCAing. If you have the cash ready and you're in there before an exponential move, lump sum is always best. Just plonk it down and do it. But always keep some cash in case there is a dip. Now, last week I answered this very same thing. When you're investing in proxies like CleanSpark and MicroStrategy, they are extremely volatile. 2 weeks ago, CleanSpark is at $6. It's at 18 today. 2.5 weeks ago, it's at $6.99, $6.90. Because that's when I bought it. And now it's knocking on the door of $18. Okay, so it's basically nearly tripled in 3 weeks. But when you have a tool that tells you to kind of DCA hard, 3x, 4x, 5x, your normal DCA amount at those times, it can work really well. And things like CleanSpark and MicroStrategy are very well suited towards this. They'll keep you out of the big squeeze times, but also get you in and tell you when to buy when it's a good opportunity to do so. So it takes a lot of the thinking out of it, so you don't have to look at the charts all the time. But be careful right now. I mean, what is it? MicroStrategy has doubled in, I think it was a period of time last week or the week before. It doubled in 5 days. So this is the crazy exponentiality of these things as well. And remember, with these assets, you can actually pair trade them really well between Bitcoin and MicroStrategy using ArbCloud, which has been really fun as well over the last couple of weeks. So check that out too. But, MicroStrategy, it's a volatile beast. Just look at the daily chart. It's like a roller coaster. Way, way more volatile than Bitcoin, which is crazy. And favorite part of the show, thank you all for coming as well. Helping animals. This week we donate to a chimpanzee sanctuary, Southwest, to help Sai. He was born in a lab, but he now lives in a sanctuary and loves to gossip in magazines. And this is really funny. He prefers magazines that don't have pictures of rhinos or elephants or pigs. But he loves watching pictures of humans in magazines, especially pretty girls, apparently. Well, I don't know exactly, but rumored to do so. Sai is a funny guy. And tomorrow we have DCA Live on my channel with Ivan and, of course, CTO Larson. So it's going to be a fun time. 7:30 a.m. Pacific, 10:30 a.m. Eastern Standard Time, and 4:30 in Central European Time. I think it's 3:30 in the UK. And don't forget to subscribe to amplify your intelligence. That's what we'll do here. And we'll do it fast. You'll never find more information. And with over 5,000 people watching live, that's a record for Q&A. Because it's heavy going. And thank you as well to the mods and chats. Okay, we do have some live questions now, which are always fun too. I'm going to drink some tea. First of all, from Trask. Thank you for all your dedication alpha every week. Oh, my pleasure. And every day too. We have Rustybot, who is our comedian on the channel. Beware of the baby shark. Do. That must be a song called Baby Shark. And I wish I was more familiar with pop culture, but I'm not. That's why you guys come here. Fantasy, Collision and Customs. Thank you for your hard work, buddy. Oh, you a rock. You're so kind. And B-Man, grateful. Where are the questions? Thank you so much. Alex Rogan, Hamilton to Ferrari. That was a bit of a shocker. A lot of shocks this season, but Red Bull are hard to catch, and for anybody in Holland or Belgium, you got a very, very, very special driver with Verstappen. Berkeley, thank you so much for coming too. And yes, Charles Kincannon, are there strategies for asset rotation during the cycle? Bitcoin, large alts, small alts, equities, have some large cap tech, when to swap, etc. Great question, and I hope I covered that regarding the case of Nvidia and Tesla using the ATR model. So that's one way of doing it. The other way too is to look carefully. We spent a lot of time and a lot of money building tools to make sure that we do not let tops pass us by ever again. One of the key mantras of how I live is never make the same mistake twice. Very important, everybody. So we got tools now to make sure we don't miss certain things. But we'll be well on top of when to swap out of certain assets, whether it be Bitcoin or others, when the time comes. And, we've seen as well large tech. It's very important to be in large tech. But again, like I mentioned earlier today, each ticker has its day, and they don't all rise or fall at once. But some things get heavily oversold. So if you have something like mean reversion, it's a great way to tell exactly what the status is of where an asset is, especially if you go out on a longer term time frame. Like it's very clear at 180 and 175, Tesla was completely oversold. And we could act on that too. Happy feet. Due to the large impact that the ETF is having on Bitcoin, ETH in the possible future, could you do a quickie on the fundamentals of purchasing of an ETF? Yeah, I think I'm actually holding a little bit of ETH for that exact reason, because we've seen ETH, I think it hit $2,900 yesterday or the day before. On anticipation of this ETH, 3 funds updated their ETH ETF filings last week. 3. So it's coming. The SEC cannot deny the ETH ETF. They'll try and stall it as much as they can, but I do expect it in the next 3 to 4, 5, 6 months on the outside. In terms of the impact, when you look at Bitcoin versus ETH, and when the Bitcoin futures came out, BITO is the ticker, it went bombastic. When the ETH futures came out, it was a nothing burger. And you have to look at the drainage from the system itself. They're just layering on layer 2s after layer 2 after layer 2, thousands and thousands and thousands of them. It's just out of control. I don't know if there's the same level of impact of an ETH ETF as there will be on a Bitcoin one. But there could be if there's another winning chain that gets their ETF too. And that could happen in 2025, if I get my years right. So we'll watch for that. But yeah, I think it's worth holding a little bit of ETH, but don't expect the sun, the moon, the stars. ETH might go to 5K, double. Well, actually from 2,900, it's not. It's only 60% more from here. It's no great shakes compared to what other assets can actually do. So I hope that helps. Adam Q, what is your current fitness regime? Well, I run every day, and I do a lot of, what's it called? Using TRX, like literally. I I do TRX before I stream to make sure I'm nice and calm, and do a lot of core. It's very important because I got a bad back. I need to keep my core strong. Touch wood, it doesn't pop up. Normally it pops up every 6 months. Yeah, so that's it. Every day running though, 10,000, at least 10,000 to 15,000 steps a day. I recommend everybody should do that, even if it's walking or working around the garden, etc. Jimmy Choi, I know you say mining is a cutthroat business, but would it make sense to hold some clean spark longer term? Yeah. Until their fundamentals change. Remember, I always say tap dancing shoes. When the thesis changes or something happens, like we saw that happen with Hut 8 a year and a half ago, it's like they were making a few different missteps and talking about some stuff, and the result is clear, So as long as they remain the winner, and let me pull up that slide one more time. This is going to be critical for us all to keep an eye on. This guy, remember I showed you, you want to be in the leanest, meanest miner. Very small overhead. That's sales, general and administrative expenses. Very low debt or no debt. Critical in this market. And you want ones that are growing the hash too. A lot. And that's why I'm in the ones I'm in. So I hope that helps, Jimmy. Yes, it's a cutthroat business, but if you're in the loser miner, it's like being in a loser crypto. It's just going to go nowhere or down. So be careful of that too. Irrational. When will the exchanges be out of supply at the current rate? Well, the OTC desks, and I checked on Thursday or Friday, they had 3,000 left. The ETFs are sucking in 6,000 to 10,000 Bitcoin a day. So they're out. The exchanges themselves, a lot of people, like if you imagine there's anywhere from 1.7 to 2.2 million Bitcoin on exchanges right now. A lot of people just hold them on exchanges because they don't trust themselves with self-custody. They're not selling. So when it says to say 2 million on exchanges, it doesn't mean they're for sale. I'd say half maybe is when the price is right. Remember as well, every asset holder has a price. So imagine you've got a vintage Ferrari in your garage, which Kamikaze Creations may have. You love that car. You're never going to let it go. But if somebody rocks up and knocks on your door and say, I'll give you $1 million for that car, you'll say, okay, bye. Car's gone. Same thing with Bitcoin. As it goes up in price, people will sell part of what they have or all of what they have to fulfill another dream. It might be a summer home or a bigger house on a lake or whatever the case may be. And that's what'll happen. But I wouldn't worry too much about what's on exchanges. I'd worry more about the money inflow. That's going to be critical. And then that supply crunch is coming. It's going to be so interesting. Again, we've got a time bomb on the horizon. And that is the time at which Grayscale stops dumping and all the nefarious characters are flushed from the system like DCG, etc. And that moment is coming close unless we find out, somebody else owns another billion. But either way, the money flows in are coming hard. In addition, Aladdin hasn't been turned on yet to allocate to Bitcoin automatically. When that happens, it's game over. Fidelity have already done it up in Canada, but that's not a huge market. When they do it down here, it'll be bonkers. When they go recommend to investment advisors, you need to allocate 1.5% to Bitcoin. That's it. That's just automatic buying forever. And it's not going to come out. It goes in there, it goes into a black hole. It's like Hotel California that was Grayscale before it became an ETF. And then finally, the halving, the supply, from the ETF some days sucking up 10%, 10 times the supply, it'll be 20 times the supply. And then we get the supply crunch. And then things will go crazy. And we're already very, very high before the halving. We're not far from the all-time, say, $16,000 away. That's nothing. It can do that in a couple of candles. So, daily candles, that is. So it'll be fun. We'll see. And I want to thank everybody as well. A big thank you again to Jeff Hammer, Investing KO, Viciously, Nick M, Daryl Anderson, Sir Winston, Signal 103, Anwar Singh, Kirby Teal, Jimmy Neal. They rhyme. And of course, Metageist. Thank you all as well to the mods in the chats. And it's been a great week. It's been 2024 started a bit bumpy, but it's going to get a lot better real soon. And 58 days to the Bitcoin halving, and that's going to be a fun time, ladies and gentlemen. Thank you all. Hit the like on the way out, and I'll see you all tomorrow morning on DCA Live. Bye.